Jon King. Many people on X know me as JK. We blend macro insights with classical charting, and today I'm very excited to have Bryan of DAiM. And Bryan, you want to tell the people anything about yourself and DAiM before we get started?
Yeah, thanks, John. DAiM stands for Digital Asset Investment Management. We are a registered investment advisor specifically focused on digital assets and cryptocurrencies and helping people manage their wealth in them, as well as managing the portfolio for them. We got licensed back in 2018 to do this, and we've been helping a lot of clients since then, and John, you are one of them. And looking forward to sharing some fundamental views to counter your technical views here on some stuff.
That's great. Well, I mean, the technicals are looking pretty good, so I'm really excited. As it relates to my trading strategy and the trading strategy of many of the people that follow us, whether it's on Discord or the reports that we're putting out, is that they are technical based. They're price based setups. We spend the majority of our time in the charts, so to speak. And so whenever I've got the opportunity to cross minds and cross notes with somebody like Bryan, who manages a team of experts and fundamental analysts, it's really exciting for me too. So I'm glad to be here. I don't know if you saw, Bryan, on report, and I won't quiz you on this, but the last report that I sent out, that was report number 57, which is kind of crazy. On page 22, I did a one-pager on Fetch.ai. I mentioned that I put it in my retirement account thanks to you, and a quick overview of the business, the network, including the founders and some of the applications. But you called me up one day and said, you've been a loyal client of ours. I want to tell you about this new token. And of course, it's crossed my desk before, but otherwise I haven't gone so far beneath the surface. So, like I mentioned, I was really excited to hear from you on this. And why don't you just tell me a little bit, if you don't mind, about Fetch and about how it applies to even my portfolio.
Yep. And so, as I mentioned, what we do for clients too is help them manage their wealth. And, a lot of our clients do like what you do. They might be having a portfolio outside of us that they're doing technicals for, where we're managing maybe their IRA, like for you, and managing it our way and our best thesis, which is fundamentally driven. And so we constantly scan the space looking for investments that could outperform Bitcoin. And that can be really challenging. And so we are not day traders. We don't look to aggressively trade. We may trade in the book 1 to maybe 3 times over the course of the year. And we look for something that could make a compelling investment case that we can put a story behind. And so we've done this in the past. We did it with Ethereum when it was changing from proof of work to proof of stake. We started last year with Solana and the way it was reviving and coming out of kind of shedding the FTX cloak that was over it. And then also going into Fire Dancer and the upgrade. And that worked out really well for us as well. And so as we're looking at the space, AI, it's not the newest theme in investing. Everybody's really watched NVIDIA kind of moon and like the hardware that it can provide and its chips. But when it comes to AI and crypto and the blockchain, we were looking for something out there. And there are AI cryptocurrency tokens that do different things. But what really struck us is this story. And it's more than just Fetch. It is actually a token merger that's going to result in the Artificial Superintelligence Alliance. And so Fetch.ai is merging with SingularityNET and Ocean protocol. And that's where we really got started to get excited about this and looking into it and what's going on. And in this space in crypto, it moves quickly. And so this is something that we pivoted, we dove into, and we started researching. And then I went to you and said, hey, take a look at this. And we went to a lot of our great clients that want to talk about these things and had conversations about it, did our research, and in fact, our newsletter is going to be coming out in a few days, and we'll put a link to this Spaces in there, and I'll also put a link to your newsletter that covers that issue so people can go and check it out and subscribe if they haven't already. And so, it's really, hey, what's the story here? And what you're going to get with the Fetch token, FET, is eventually it's going to be converted to the ASI token. And in that, you're getting a stack of AI protocols that are going to happen in there. And so Fetch.ai, what it does is it's an AI agent creation platform. And then you have SingularityNET, which is a marketplace for AI. You have the Ocean protocol, which is really like database retrieval. And there's a pending fourth company that's going to merge in that I can get into in a little bit about this. So there's a lot of moving pieces to this story, and it's just really starting to play out. And the token mergers will need to also be upgraded and switched on certain exchanges. And then after that, then the release of the work. And so we think that there's a compelling story here to outperform Bitcoin alone in portfolios.
I know that's possible, outperforming Bitcoin. You mentioned earlier, DAiM was early in both Ethereum and Solana. I can attest to that because I was a client by that time. But you said a lot of things, frankly, that I have no idea what they mean because I'm mostly a chart trader. And so a bit of it, got to sound a little Star Trek-y. And that's both really exciting and really scary. There's like a super AI alliance, and right?
Yes.
So it's more than Fetch.ai. And that sounds really exciting. I don't exactly know I hear about crypto AI, and I'm not sure what those two words mean in the context together. So if you don't mind, and of course, if I'm moving too slow, that's fine. But if you don't mind, when you talk about this super alliance, can we go back a little bit to that?
Sure. Yep. And so you had these businesses that were out there that were providing decentralized AI services running on cryptocurrencies. And so you could use their agents, you could purchase the token, and then you could create stuff, and it'd be decentralized, and you could completely control the database and stuff that's happening. So let's say a company like Palantir that's out there, they're offering consulting services to businesses, and we all know that they have to be using AI to help improve the businesses that they're working for on a contract basis. And so when Palantir goes in and does this work for a company and tries to improve the business, they're gathering data and they retain that data. Now, obviously, there's probably an NDA in place, but then there's also controlling stuff like what they release back to the client in order to maximize their revenue, that maybe they tier things out in phases, where if you go to use AI on the blockchain and use a decentralized service paid for by tokens, you get to control all your data. And I think that's like really where the future of integrating the blockchain with cryptocurrencies comes into being beneficial to people. It's like, we have centralized businesses that you can go to improve your business, and then you have the option to use decentralized. Well, in order to use decentralized, the only way is to incentivize is through using tokens, and that's on the blockchain.
All right, my mind is a little bit blown because you used Palantir as an example, and you used the way that essentially when an enterprise uses a company like Palantir, they're handing over the keys to their data in order to use Palantir's service, despite it being a long-term, multi-million-dollar marriage, so to speak. Yep.
And so the alternative, and there's many, many businesses out there like that, right? And it's, you're seeing it everything now with Google, with their Gemini platform. There's just going to be so many things that if you want to do this and really control your data, that there's an option for you that's up and running. And then instead of having to piece it all together, where you had Fetch, that was the AI agent side of things, and then when you're doing this agent work, the data's got to go somewhere. So then the AI retrieval is by Ocean. Okay, well, let's just bring that together in one package. Okay, well, then you need the marketplace, Singularity. Let's bring that in. And then the fourth one that's currently under vote is Cudos. I know there's a lot of names flying around, but they are the compute side of this. And so when it comes I can actually tie this back a little bit to technicals, is that the token merger, like the tokenomics of it, is Fetch is the main company that's doing one-to-one conversion of the FET token to one ASI. SingularityNET and Ocean Protocol are on a ratio. They're a little less, and they're already trading in line with the ratio price of I believe it's 0.433 units per ASI. And then Cudos will be a little bit different, and there might be some edge there if you want to play the vote that they will merge into this. There could be, a discount it's currently trading at if you want to look at that one on the outside.
Sounds like some alpha. I'm glad this is recorded because somebody will be able to go back and listen to it. I just wanted to say, Bryan, what you're saying makes perfect sense to me because I worked very closely with the integration of Palantir's Foundry application in my last role. And of course, like being the one that essentially RFP'd that entire project, the whole concern as an executive of that business is, wait a second, I have to upload all of my accounting data, all of my gross profit margin and my cost data to a third-party provider. They have to sign NDAs, etc. So what I'm hearing is that each of these tokens, like Fetch.ai, like Cudos, like Ocean, if I go back and I think about the process of, from a data lake integrating and translating, or I can't think of the word that you used, but changing information in a way that an enterprise can use it more effectively. These tokens are just pieces of that solution that are coming together for this AI supercomputer alliance. Is that correct?
Yeah, so instead of having to go to 4 different platforms, cryptocurrencies, 4 different tickers, and then packaging all your work together, these companies are going to merge and use one token so that you can use their full stack and make it a better user experience in the most simplistic form.
Okay, and you did put that in my retirement account, right?
It is in there.
Okay, good. So I'm getting excited about it now too.
Good. Tell me a little. When I brought up Palantir, that I had no idea that you had worked on anything relating to it. I mean, I'd love to hear a little bit more about that and kind of like play off what we're looking at here on decentralized AI.
Sure. I mean, there's only so much that I can say.
Of course.
As you know, everybody in that whole process signs NDAs, but essentially, it's a great resource for connecting or fixing data that's broken. So the problem that we have now, I think, is that there's so much data that it's not organized in a way that makes it easy to use, right? So then first we got SQL from Oracle back in the day, and now Larry Ellison's one of the richest men in the world and the highest paid CEOs on Wall Street forever. But with Palantir and with what OpenAI and Microsoft, et cetera, are doing with these learning agents, you can upload data, and let's say you had a human employee who was out for a week and you've got a week of missing data, or worst case, let's say your ERP system or your manufacturing system went down for a month and you weren't able to scan goods going in and out of the factories. Well, Palantir and AI, in a nutshell, these learning agents, they can essentially say, they can look at all of the data surrounding your data where there were holes, and it can, intelligently fill in those gaps. And not only that, but you can create, I think one of the coolest things about Palantir was that you can create action through the use of data. So if I'm just manipulating data in SQL, there's no world that I can actually, in the same instance, like program SQL to email everybody that is a buyer of product SKU 1, 2, 3. But with Palantir being all integrated into one system, it has the ability to clean data and also create action items out of it. So just a really smart system. And then to your point, the way that they chunk projects for long-term success, you have to sign an X-year agreement, but their team of developers gets projects done pretty quickly. Mm-hmm. That's the most impressive part. And so, yeah, you sign up, you do one thing, and you see how quickly that process can lead to another improvement, and just pretty iterative process.
Yeah, you said 2 things in there to really touch on, and it was in the beginning. One of them was about data and data retrieval, and that's one of the parts that Ocean Protocol brings to this is that the AI component to help quickly retrieve data back and forth. And so the next thing is FET itself being the major component of this merger in its AI agent. Well, they have the ability the agents can delegate to other agents artificially to do that work, to kind of bridge these gaps like you were talking about in reading the data. And so, yeah, ultimately, this really looks like out of the space that you could play in the blockchain decentralized token space, bringing these 3, possibly 4 companies together under one token to use could be a really great suite and an alternative for companies to look at. And there are a couple use cases out there. Deutsche Telekom, T-Mobile, has been expanding and using some services apparently for Fetch. So is Bosch, the heavy equipment manufacturer. And then there's a university using it too. And it seems like the last 2 are being used for how do we improve energy, like energy consumption? How do we lower our energy bills, and running these agents and retrieving data? And these guys all kind of controlling their data, but making improvements to their businesses and efficiencies. And so we look forward to, getting these companies together and seeing how adoption goes after this merger. It's kind of the first also that we've seen in the crypto space. A merger of any kind and of this size. We've seen conversions from blockchains. We've had things switch from Ethereum to Solana, but this is the first kind of merger of this size of tokens. It's pretty cool.
Yeah, that's really cool. I'm glad that we went back and did that. That was a great conversation. Thank you. So then I've got Fetch.ai in my retirement account. That's good. I'm happy. So what is, as a holder, so to speak, what does the merger look like for me, like mechanically speaking, or
Yep.
maybe execution-wise for you? How do I end up with this new token?
It's going to happen automatically for you. So we're business partners, as you know, with Gemini. And so Gemini's team is fully on board with doing the merger and handling the conversion. And so since FET already trades on Gemini, once they do the back end, your portfolio will just switch and it will become the ASI token. As for SingularityNET and AGIX and Ocean, and then possibly Cudos that trade on other platforms, it's going to be up to those platforms to do a centralized exchange conversion. And if not, SingularityNET has some capabilities to do the conversions for people. And then once you have the ASI token, if it's outside of a retirement account, you can go to a platform like Gemini, and then there's liquidity there and wallets provided. You can't do it directly in an IRA because there's complications with the IRS. The IRA has to always start with new qualified cash. That cash has to buy the assets. So that's just kind of that's a different topic and stuff we went over actually on a Spaces before. But yeah, retirement accounts have the special, I should talk about it real quick, have the special capabilities to be tax advantaged, to where gains in the account are tax free, and then depending on the IRA structure, if it's a traditional IRA, it's at your tax bracket at time of retirement. And if it's a Roth, it's also tax free at time of retirement. And so these fundamental plays and these stories that we do over the years, and the accounts growing and striving for outperformance, which we've achieved against Bitcoin, it's great to have them in a retirement account if you can. And so yeah, Gemini is going to handle that for us, going back to.
Good point. I mean, that's part of the American dream, right? Is I didn't grow up in a household where these tax saving strategies and whatnot, they were taught to me naturally. And so for people that are in crypto, or maybe the first generation in their family that has a 401k or can have an IRA or something like that, hearing and now seeing what I've seen, the ability to have gains like the gains that you can essentially have as a VC investor almost in some of these early crypto projects. Of course, they come with the same amounts of risk, needs to be stated, and but the ability to get access to those gains in a retirement account and have the tax benefits that you just mentioned is profound.
Profound. You can't over contribute to it. There are limits. But if you can contribute it, like obviously anybody could message me after and my team, and we can help talk about like how these strategies get put together in order to set up an account like the one that you have to be able to hold a project like this and, like you said, almost really participate as a VC without having the cumbersome lockup period or being an LP, having penalties for early withdrawals or a punitive performance fee. This is liquidity right here. This stuff, and that's the beauty also of cryptocurrency, is like, yeah, there's a lot of volatility, as you mentioned, but volatility is also to the upside. And that's how you can get large gains in your account, is you put it out to play. But I think it's really important to understand that if it's in a retirement account, you still have that liquidity, even though you can't take it out in cash until you're 59 and a half, you can still move between investments very easily.
Yeah, and I don't want to encourage anybody to make any type of rash decisions, but just to be clear, can you take it out before you're 59 and a half with a penalty?
Yes, and the penalties are pretty punitive. At your tax bracket, there's 10% penalties against it. You got to watch what the gains are. It's really, really punitive. We just consulted with a client on this about 2 weeks ago. If you can find other means to bridge what you need for cash flow, even paying a higher interest rate, it's a little bit better to cover a short-term loan of 3 to 6 months versus pulling it out of your retirement funds. I mean, if you charted this out over like a 20-year period, you will see that an early withdrawal, you bridge yourself. Well, you can't get that money back into the IRA. And there's a small window where you could possibly do it, but it's too tight and nobody really lands it perfectly. So now you're left to reinvest that money in a brokerage account, which is now going to be taxed. And then if you just looked at it, if you were able just to fight through that tough time, get a second job, credit card loan, borrow from family, anything you could do, once you recover, leaving that money alone in the investments, then having it tax-free, you're looking at 4 to 5 times the difference despite the potential gains in the asset. Like just because of the tax strategy that you would be really messing up.
And that's the difference between, we've all read Rich Dad, Poor Dad. I think, it's having an advisor who understands those principles and those tax advantages is essential. I've sat in rooms for most of my career with high net worth individuals, and I can guarantee that their highest annual expense is keeping tax advisors close by. So
that's right. We see it all the time with high net worth individuals. We work with some family offices, and the more money that's there in wealth, the more types of accounts there are to help protect from taxes. From the traditional IRA to the SEP to the company 401k to LLCs to C Corps to S Corps, the trust, like there is so much that keeps going. And starting with at least a traditional IRA is doing something. And that's the easiest one to start with. Then we can get into the Roths. And then there's more complex stuff that can go as a business owner, SEP IRA, solo 401ks, all that stuff. Yeah, it's great. It takes a little bit of work, but once these things are set up, and when I say a little bit of work, honestly, like if when clients come to us, we actually handle most of this stuff for you. You just have to do signatures and understand the story once we tell it to you. It's all monitored and it's done by a qualified custodian. It's reported to the IRS for you. You just got to keep your accountant and CPA up with 1099s that you get issued or 5498s. And other than that, once they're set up, these things are beautiful. They're there for you.
I can confirm. And if anybody wants to chat with me or have me put them in touch with Bryan, you see him right here. I can confirm that it's been a very pleasant experience. And what I probably put money with you guys in 2021, maybe 20. Yeah, it had to be 21. But yeah, it's been a great 3 years. And most importantly, as someone who is an active trader with at least a large part of my portfolio, given that that's what I do for a living, I love having it hands off. I love knowing that it's not only is my tax advantage money allocated to crypto somewhere, but that there's people, it's more than just, I don't mean to say more than just Bitcoin, because Bitcoin is my favorite thing, but it adds diversification. For example, Bitcoin's still 10 or 15% below its all-time highs here in the lower 60s, and there are some of these alternative coins like Sweet. I still don't know how to say it, but Fetch that are closer to their all-time highs and that have had stronger relative performance over the last 60 to 90 days. So I love the diversification that it adds. I appreciate what you guys do completely.
Thank you, buddy. Yeah, it's a definite contrast, and I think you'll find, like some of our other clients that have portfolios outside of us, it's a diversifier from your own portfolio management, right? You got yours, you're managing it that way. We just take a fundamental view on our side. The track record's been great so far. We continue to strive for that, and first thing that comes is a risk basis, right? Like, we always want to make sure that we're with the right custodian, protecting assets. We benchmark to Bitcoin, and then we try to seek alpha and do these things in a very conservative manner, and then keep fees low, right? That's why we don't trade so much either in these accounts. We do have a lot of brokerage accounts with us. Actually, if we looked at our total book, the volume in AUM is going to be much larger in brokerage accounts than in IRAs. But that's kind of a product because IRAs can only get so much contributed to them each year, and then but on the gains. And so, but yeah, we got to be considerate because we only run one book, one management, and everybody gets our thinking, regardless if you're a guy that owns a construction company, to an attorney, to the PMs at a family office that we manage for. Everybody gets treated the same. My accounts are in it, so my guys' accounts are in it, and so that makes it really fair. It allows us to focus and then find things like this when we think that it's right and there's a fundamental story, and kind of go after it, monitor it, watch it, and then try to capitalize on it and take it off at the right time. And then also watch the macro side of things, right? Like, where is the overall space going? Where are we at in the cycles? Which then actually starts coming back to a bit of what you're doing, in the technicals.
Yeah, I love it. It's been fun. I mean, not to veer off, but you just mentioned it. I woke up to an email this morning from a guy in Cyprus who is a subscriber, and he was asking me a question, and I just thought, man, this is cool. I had no idea I've got subscribers overseas.
That is great. So, yeah, it gives you energy for the day, right? You're like, okay, people are finding benefit from what I do. It's helping them, and that's what I want to do more of. Yeah, that's great to see.
So you mentioned some of the risk, but you mentioned counterparty risk, and that's really important. It actually, I'm glad you did, because it a lot of people in crypto, at least the ones that follow me on X, a lot of them are early in their investing life cycle. And somebody asked me the other day, what is counterparty risk? And I thought it was a bit alarming, of course, but it was a good teaching moment. And so when you talk about counterparty risk in crypto, how do you look at that?
Yes, we've been business partners with Gemini going on almost 4 years now with them. And so it's, hey, who are the people that we're doing business with? Do they have adequate humans operating in the business that can also answer us? And I'm talking beyond emails, phone calls, meet in person. Like, these things become really important. Now, not everybody on their own individual account is going to have the level of service that DAiM has, DAiM. But it's just because we're large. But that's the benefit all of our clients get, is our ongoing due diligence with providers that service our clients. And it's just not, hey, it's one and done. It's ongoing. It's routine. It gets stepped even more when we start to enter a bear market. Hey, can we talk to an advisor of your board? If you're not there to answer something, who is? Back in 2021, we got introduced to the team at FTX, and we had our first initial due diligence call with them. And we have a very basic due diligence form, and it kind of starts with, like, who are the principal owners of the business? Like, we kind of want to know who's there, who has the ability to maybe change wallets, to send things behind the scenes. If that person's not available, what's the phone number of the next person in line we can talk to? And when they didn't want to start answering those questions and providing those details, there was nothing for us to do. And so counterparty risk is that. I was just in Grand Cayman meeting with a team so that we can start providing loans to our clients against their crypto positions. Now, in the past, those have been the sources of counterparty failure. Let's talk about Celsius, BlockFi, Voyager, right? These companies were hypothecating. They were moving clients' assets in the background when they weren't supposed to be. And so even though in the contract it may seem like those tokens are your tokens, they're really not. And for us, we try to go as far as we can to meet the team in person, like where I just was in Grand Cayman, do the due diligence, test the system, test the pipes, put on the trade, come out of the trade, stake, unstake, borrow, return. That way we can get a real feel for not only the system and how it works, but where things could be difficult in a bear market, because that's really where everything starts to show. And then it's putting partnership agreements in place that further protect our clients, because we don't see a scenario where we really want to ever let any counterparty rehypothecate crypto. There's enough returns that we don't need to try to get a cheaper borrow rate to hypothecate. Like these coins, as much as like a lot of your followers, like not your keys, not your coins, but to in essence, if you really want to grow your wealth in this space, you do have to trust people to an extent. You're going to need, like Gemini and us, we are able to provide statements so that clients that want to buy a home need to show their net worth. These statements that we provide them help them justify their net worth, right? And a lot of that is hard to do if you're just holding a personal hardware wallet on things. And so when it comes back to our providers and counterparty risk, it's, hey, does this stuff also, is the company that we're going to be working with able to accurately help us report to regulators? If they are, that also means that they're likely doing stuff behind the scenes that they're really comfortable with having a regulatory audit on as well. I know there's a lot there.
No, it was a great answer. It was very thorough. The first thing that you said about, of course, FTX gave me a little bit of the chills, because we've all got some PTSD, at least anyone that was a Solana holder back then. But it's like Warren Buffett says, the most important thing you can say is no. And so just being there in person to do the diligence, like you said, test the pipes, make sure that the system works, stake, unstake. I was a little curious just because that can get expensive, but there's nothing that says you have to do it with significant size. So,
right.
Anyways, that's really helpful. Really interesting stuff, and I'm glad now I get to know what is going into my portfolio. I knew Fetch was going in there, but I didn't know what it was. So.
And we have more work to do on our end, by the way, JK. It's, the story is not 100% perfect. This is not something that's being broadly broadcasted, crypto news media. There's still some work to go on with Gemini, for example, the centralized exchange doing the upgrade, but we have faith in them that they'll be able to do it successfully. Some of the teams at these places, you got 3 companies, not that are going to all come together and work under one roof. They're going to keep working in their own vertical, but they've merged tokens, and how they're going to really integrate in the back end. How smoothly is that going to go? Is there, there is a little bit of overlap, even though all 4 of these companies seem like they each do something specifically different. There is some things that they do a little bit of overlap in. How are they each going to handle handing off those tasks to hopefully the better team, right? And so these are things that we need to monitor as it goes on, and watch how the team behaves and the tokenomics of it.